Hello everyone, and welcome back to the Payments Podbyte. Today I'm joined by Nayan Raut, an Associate Vice President and Regional Business Development Director for Compass Plus Technologies based in APAC. So Nayan, on to today's topic. It was recently revealed that an estimated 290 million adults in Southeast Asia are still unbanked. Why do you think this is?
Hello, everyone, and thanks for hosting me. Well, the number seems to be very big for being unbanked, and if you add underbanked, for example, people with the bank account but who do not have the complete banking services, for example, access to the complete financial services on top of the basic account services such as credit, payment, loan, investment, insurance, etc., then the number increases up to 50% of the population in the region is unbanked or underbanked. Now, there are multiple reasons why people in the Southeast Asia are unbanked or underbanked. First of all, we need to understand Southeast Asia is a large geographical area with different cultures and socio-economical habits. There are two major factors, again, behind this. Number one is cash. Cash is still a common payment method with more than 60% of consumers in the region still using it as their favorite way of paying, which gives them confidence. People can physically see what they transact. Well, most of the population is poor with or low middle income population. These households with limited banking accesses and are not financially literate. So for them, it becomes easy to transact with cash. Another reason is limited access to the banking. For banks to have a branch and provide various services at the remote locations, it is not a viable option. We need to understand that the banks are working under a strong central bank regulation. So they cannot just provide a number of services to the population without certain KYC norms. And at the same time, they need to make sure that the customer they're serving generates profit for them. Bank needs to make money out of branch, but it may not be a case in various remote locations. And this lack of incentive to them to have a branch in remote location results in limited access to their consumers. So if you look at the numbers of fintechs and fintech company rise in the region, they have addressed a lot of these issues, but the banks and financial institutions are still struggling to address these issues. The primary reason behind it is that they way of traditional banking and traditional payments platforms. We know that the bank today are not just the financial institutions, but they are the technology companies. They are the technology companies that are using conventional platform. So that's the main reason, yeah.
Okay, so in your answer there, you mentioned that a lot of FIs are still utilizing these conventional platforms. What impact does this have on financial inclusions and adults being unbanked?
Well, the conventional technology can only serve conventional customer. Of course, the financial institution needs more modern technologies to attract unbanked and underbanked customers to provide access that they lack. As you can see, the Bangladesh has provided an excellent role model in this regard. The population widely uses mobile phones with over 90 million unique mobile users they have. And they are the key to the financial inclusion to move totally digital. Things such as account opening, KYC, payments and credit, buying insurance or getting loans can be easily enabled with the mobile wallets or mobile banking solutions in the quick time.
Okay, and specifically, how can FIs adapt their business models to increase financial inclusion in Southeast Asia?
Well, FIs need to learn from fintech companies, of course. They cannot, of course, we know that FIs cannot burn money like fintechs can because they are heavily regulated by the central banks. But they have something which fintech lacks. That's the trust of the customer, access to the customer data. So FI can use this data and analyze that to target the market and needs. They can use more transparency on how they will be able to use the customer data rather than just sending them to some third parties to do cold calling with the customers. For example, like we get the calls for loans and insurance services. FIs can set up internal processes, educate their consumers on how to be more financially literate than just using the bank as a traditional banking. We know that the fixed deposit and the savings account are the major services these people are using in the region. And the interest rate of these services are falling very, very fast and very regularly. There is no incentive for the customer to hang on the services with the bank. So they don't want bank to be just a safe deposit safe deposit box for their money. So I suggest the bank should replace the traditional payment platforms with the more modern solutions. The solution that can provide flexibility and add payment methods and the card services, new transaction options, integration capabilities to the third parties, and innovative technologies in the real time by addressing time to market and cost.
Okay. Well, thank you very much for joining me today, Nayan. You've shared some really interesting points on why the adults in the Southeast Asia are still perhaps unbanked and what the financial institutions can do to sort of increase the levels of financial inclusion in the region. For everyone listening, as usual, thank you, and we'll see you in the next podbyte.